If you look at 10-year rolling returns for the S&P 500 index, very rarely over time would you have experienced a negative result using a long-term time horizon. Looking at today's fixed income environment, the environment for traditional interest-bearing securities is rather dull. You have a low 10-year treasury at roughly 1.3% on a nominal basis. After incorporating 10-year expected break-even inflation rate, that turns into a real yield of negative 1%. It's not much better on the corporate side of things, with AAA Moody's rated bonds on a real basis yielding only 10 basis points. So certainly, paying up to participate in risk-free securities is not necessarily an attractive value proposition. On the equity side of things, using the equity risk premium, which takes the earnings yield of the S&P 500 index and deducts the 10-year treasury yield, right now we're at 3.5%, which is pretty attractive relative to history, where the long-term average for the equity risk premium is at 2.1%. What this equity risk premium is telling you is that investors are being fairly compensated for the additional risk involved of participating in equities relative to fixed income. So certainly we find this to be very constructive in terms of the equity market. From a different valuation standpoint, if you liked stocks at the beginning of the year, you should like them even more today. Certainly prices have appreciated significantly, but it's important to note that earnings of those companies in the US have appreciated even more, resulting in multiple compression on a price to earnings basis. 87% of companies in the S&P 500 beat on revenue estimates over the last quarter, and that same number is true for earnings of the companies in the S&P 500 over the last quarter, resulting in the highest year-over-year earnings growth since the fourth quarter of 2009. So certainly prices have appreciated, but the ability of companies in the US to execute, we think speaks to their dynamic nature and provides us with a constructive outlook for them going forward.